What is up, everyone? So today I want to talk about what I think will be the best investment opportunity of 2018, and it's more of like a sector as a whole, and that is the energy sector, and oil and gas specifically. And I'm going to go over what I think the best way to play this move will be. And yeah, at a time when the market is, Dow's at 25,000, stocks are at a whole. I think the S&P 500 is trading at about 20 times earnings PE ratio. So that is somewhat overvalued, but I do think the tax cut and the tax bill is going to really stimulate the economy. So I don't think it's necessarily overvalued, but I do think you want to look for more value in this market, and energy definitely provides that. It's been beaten down for the last 3 years, and now it's finally starting to uptake a little bit. Oil, you saw it bottomed at 28. Right now it's almost pushing 60. I think it's about 58 per barrel, and then I think Brent is 65 per barrel right now. So I think this is still really low levels. I think 2018 you're going to see this continue to go up to $70, $80 a barrel. Saudi Arabia is IPOing their Saudi Aramco in 2018. I think that's going to be early to mid 2018 that they're going to do that. And you have OPEC that's continuing to push their supply cuts, and they want oil to go up. They don't want oil to stay at 40, 50, even $60 a barrel. They want to see it at $70 to $80 a barrel. Because when it was at $40 and $50 a barrel, you saw those countries really struggle with their social programs. They've been having to cut those. Saudi Arabia, they're having to cut into their cash reserves. So I don't think this is going to continue for too much longer. Obviously, the supply and demand curves are also very favorable. You have demand that just keeps going up and up and up, and with the world economy performing so well, it's just going to continue to go up. I think we're projected to do over $100 million or 100 million barrels per day by 2018. So yeah, today I just want to go over what I think the best way to play this move is, and that is through ETFs. That provides the most safe way to invest in oil, I think. You don't have to select individual stocks. With individual stocks in the oil sector, some of these more higher levered oil names, if oil doesn't go up, there is a risk that they will go bankrupt. So I think ETFs really provide great value in that they're not going to go bankrupt because they select a basket of stocks within the oil sector. So let's go ahead and go into my computer. I'm going to show you some of my favorite ETFs and maybe a couple stocks as well. So this is the first ETF that I think is definitely going to outperform with oil. That is XOP, and later on I'm going to show you like some of the individual stocks that these ETFs hold. But first off, I just want to go over the charts. So this is the 1-year chart of XOP. Bottom at 28, and right now it's about 36. So this was back when I think oil was around like 50. Let's go to a different time frame setup. Let's go all the way back to 10 years and do week. So yeah, this gives you a better idea. Bottomed at 22. That was back when oil was like around $30 a barrel. And I do not see oil going back down there for a very long time. Back when oil was trading around $110 a barrel, back in 2013, this was about $70 to $85 per share. Back in 08, this was around 70. So there's definitely a lot of room for appreciation if and when oil goes back up. Let's go to another one. We'll keep it at the 10-year. XLE. This one holds a lot more like safer stocks. So like I think it has ExxonMobil, ConocoPhillips, Phillips 66. So a lot bigger names. It's not going to move as much with oil. So this bottom around 53, and right now it's about 71. Back in 2013, it had a high of about 100. Um, so yeah, like I said, not as much room for appreciation, but this is not going to fluctuate up and down as much with oil because it is a lot safer of a name. Another one is AMLP. Um, so this one is a MLP ETF, and if you don't know what MLP is, it's kind of like a pass through. Um, and actually, if you know Lynn Energy, they were an MLP, and they did go bankrupt. They were very highly levered. Um, so there's kind of been a little bit of controversy about MLPs, but they do provide a very, very attractive dividend yield. I think this one yields around 8 to 10%. Um, so that's like pretty crazy, actually, that you can get 8 to 10% plus. This is going to appreciate quite a bit with oil too. Had a high of around 20 back in 2013, 2014. Low of about 750. So yeah, I guess this actually doesn't appreciate or fluctuate too much, but it does provide a very nice dividend yield. We can go into year. I don't think that's what I want. Hold on. 1 year and day. Okay. So yeah, I recently had a low of about 980. Right now it's about 1080. We can go back to XLE. Low of 61. Right now it's 72. So these have gone up a little bit, but I do think they are still very reasonably valued. Um, and yeah, I think with oil, I think 70, 80 is not going to be unheard of this year in 2018. And then 2019, 2020, I do think you can see it go back up to easily $100 a barrel. I think you're going to see a supply crunch definitely in 2019 and 2020. 2018 will be another year of rebalancing. So you're not going to see it go back, $100 a barrel unless something crazy happens in the Middle East. So yeah, now we can kind of look at their top holdings. This is XLE's top holdings. So yeah, Exxon, Chevron, Schlumberger, which I do think is a good stock. It's been beaten up pretty bad because they've had holdings in Venezuela, and if you don't know, Venezuela has been just down the tank. They're on the verge of, or they have collapsed pretty much as a country. But they still need to restructure their debt, and that's why Schlumberger is doing pretty poorly. But they do provide a good dividend yield, and I don't think it's. If you're going to pick an individual stock in the oil sector, I do think this is a great one to pick. So yeah, Conoco, I own Conoco as well. Halliburton, Kinder Morgan, and it provides a pretty good yield too, 3.14%. We can go to XOP, Carrizo, Whiting, Oasis, Continental, Hollyfront. So slightly smaller stocks. We can pick some of these out. So yeah, 1.75 billion market cap. That's quite a bit smaller than ExxonMobil, which has a market cap 355. So you can see why XLE doesn't fluctuate as much as something like XOP that has a lot smaller market cap of names. We can look at AMLP. Oh, and this one does provide 0.83 yield, so not much, but still not bad. So AMLP, yeah, 8.3% yield. That's crazy, crazy yield. Their top holdings: Magellan, Enterprise, Energy Transfer Partners. Let's look at some of their market caps. 15 billion. Enterprise is 57 billion. So still fairly good sized companies, but these are all MLPs, and they do provide great yields, as you can see. And real quick, we can look at Schlumberger. Like I said, if you do want to select a specific stock, I think this is a great one. They do pay 3% yield. And yeah, as you can see, they're pretty much bottomed out right now. They bottomed around 62. And they're pretty much at their low back in 13, 14. This was 100 plus per share stock. I think it's very attractive at this valuation right now. But yeah, other than that, I think you want to stick to ETFs, and I guess you do want to look at expense ratios as well, because that can kind of eat up what you can make. So this one has 0.85%, and if you don't know what expense ratio is, it's just what you would pay in 1 year to hold this ETF. It's basically what you pay someone else to manage these holdings. So yeah, this one has 0.85, which is actually somewhat high, but let's look at XLE. Yeah, this one's 0.14, so not much at all. XOP, expense ratio of 0.35, so yeah, still not bad. So yeah, I think all three of those are great options. Definitely each has their own specific risk, and they definitely fluctuate differently with oil. So you definitely want to select those with your own risk profile, how much risk you can take on, and kind of choose from there. So yeah, that's it for this video, guys. I just wanted to show you guys some of the best ways to play the oil move that I think is going to happen. And like I said, when you select ETFs, you mitigate that risk of holding individual oil stocks. So I think this is definitely the best way and safest way to play oil. There's still significant upside, I think. So yeah, that's it for this one, and I'll see you guys in the next one.